Good afternoon, everybody, and welcome to another edition of ChartWatch Live. My name is Capolingua. I'm from Market Index and LiveWire Markets, and it is a pleasure to be joining you today. Today, obviously, we'll check out the portfolio management model on the Nasdaq Composite and the ASX 200 to determine how full our risk bucket should be. Very tricky at the moment, and then I'll take your requests. So I'll give you my best technical analysis reader on any of those ASX stocks that you're interested in. But hey, it could be something to do with commodities or indices or anything else in the world of financial markets. I'm really looking forward to this one. So let's get stuck in. First and foremost, as I promised, we'll head over to the AMI broker screen. It's just the charting package I've used for many years. It's not better or worse than the others, and you can go seek out the one that suits you. And I'd mention that because we've had a few requests through the week as to which one Carl's using, and it's the ASX data and some of the international indices data is powered by Norgate data. It's a bit of a plug for them. Very good. The Nasdaq 200, potentially, look, it sold us a bit of a dummy over the last few days, certainly with this big black candle, which is about as bad as you can get. I mean, the only thing I think that would have made that candle worse was if we had seen some above average volume. So this section here is where I can see above average or below average volume very simply. I know there's a lot of complicated, complex volume tools out there, but for me, I just want to know if something interesting has happened, and that would be above average volume. And over here, we've got volatility as well. So daily volatility, looking at a longer term average. And yes, it was a massive volatility day. We can see that, certainly the biggest since Trump's reciprocal tariffs back in April. But not so much market engagement. So we had a big black candle, certainly huge motivation among the sellers, and about average number of those sellers hitting an average number of buyers. So not exactly demand, sweeping in. Certainly demand was getting fought back, but not this huge wall of supply either. So this bounce over the last 3 days, initially quite tentative here, but actually looking quite forceful now with these candles. Again, you can see below average volume indicating, yes, we've got motivated buyers, just hitting this supply vacuum. So there's not so much money or shares interacting for the price action we're getting. I think that's the best way to put it. So there's a bit of malaise out there. What does that mean? The market market participants are uncertain, no surprise there, but in, I guess, the thinness of the market, we are getting these big swings in prices. So in summary, what does that mean? It means volatility. I mean, we V for volatility because you've got your V here, and that's telling you you've got volatility. And it makes it tricky for trend traders because, there's an old saying, in volatile markets, in choppy markets, trend traders get chopped up. So that is why I'm at my minimum risk settings at this point in time. Happy to entertain adding risk if we can see something in the Nasdaq. It looks like this. Obviously, getting above the short-term trend ribbon is important. We want to see now areas. I'm going to kill that because it's not a great color for us to see, and turn it into something we can see. Any sort of supply side response. We've had a bit of a rally. We know there was supply in the market before. Let's see how the supply side responds. So the shallowness of that response will guide us. If we only get a shallow pullback from this move here, it tells us that that supply that was very motivated before doesn't seem to be wanting to interact. We can see the demand's potentially coming back in, albeit very tentative. It would be a positive sign in order of magnitude, right? It would create a higher trough as well. Potentially we might get a higher peak if we can get above the high of that big black candle and continued downward pointing shadows. That's the composite. I can't see any reason to change my risk setting at this point in time, and I've explained what would need to occur for me to start to build back up the risk bucket level. Heading over to the ASX 200 now, just to round out. Obviously, if you've got a bucket that's trading US shares, that's the risk allocation there, and this is now what we're looking at for Australia. And with the old zebra pattern here, so when zebra pattern is where you get candles, not so much how big they are, but these are big candles where we had a 100 point decline there, 100 point rally here, 100 point decline, 100 point rally, and now pretty decent rally today. Today's candle I think is quite important when pushing back into a zone that could potentially behave as an area of supply. If you're familiar with my turnaround setup, you'll know that once we get beneath that long-term trend ribbon, it can often repel rallies. It might not happen straight away. It might take a couple of candles before you start to see the fingerprints of supply working their way into the market. But we are in a bit of a dangerous zone here. Very encouraging up to this point, but we just need to be careful with the candles. So we don't want to see black candles in here. We don't want to see upward pointing shadows, because when you have an upward pointing shadow, it tells you were going really well in the morning, and then the supply came in and sold into that rally. We don't want to see sell the rally activity in any bounce. We want to see buy the dip. Short-term trend ribbon probably also going to be an issue. So there's still plenty of challenges here back to the upside for the ASX 200. And again, trend following, it's always delayed. There's always going to be delay. If that's the low 83.83, I won't know until I see price action to tell me that when we're pulling back, we pull back in a shallow way, and when we move up, we're moving up in a more aggressive way to tell me that the supply, the nervousness of that supply is dissipated, and in fact we're turning back more into a FOMO by the dip, and we're withholding supply for higher prices. So hanging out for upside, HOFU I call it. So going to stay where I am at the moment. Might frustrate people who say, hey Carl, look, the market's clearly bouncing. Shouldn't you be building back up, the level of your risk bucket? And I say, look, all in good time. I need to see evidence from the market that the demand side is increasingly taking control until I see that. So it is a bit of a conservative approach, but there's a very good reason for that, given the capital V volatility that's out and about at the moment. Okay, so that kind of guides our risk bucket, or how much risk we take, which I still think is requires conservatism. Certainly, if you are moving maybe back into longs and taking advantage of some of these pullbacks, then don't forget also that there still might be opportunities to short out there if the market does turn around and we see another leg down from here. Go to knock off the offline requests first. Got one here from YouTube. Let's just say TK, because it's one of those funny YouTube handles. Not funny as in haha, but funny as in unusual. And TK says, how do you scan for suitable trades? Do you scan for monthly highs and lows? I'll answer the second part first. Do I scan for monthly highs and lows? No, I don't. I scan based upon exactly what I teach you here every Wednesday, which is to look for developing and established uptrends to go long or to add risk to, and to look for developing or established downtrends to short effectively or reduce my risk to, should I have exposure there. So the way it works is Amy Broker has a facility through the analysis here, and you can see I've run a particular scan this morning to actually just to grab prices, but through here I have a various number of scans that I can run, and up here you'll see it's just changed to long scan for obvious reasons. I'm looking for uptrends, and I'm not going to share with you what goes into that scan, but it is, to be fair, very simple in that it will look for when we've got green ribbons ultimately, and show me those results. So there's an algorithm. I don't control that part of the process. I put in every stock on the ASX, so it's around 2,500 stocks, and this will scan through, and it'll literally take about 10 seconds to scan all of those stocks and present to me a short list of stocks that are meeting my basic criteria based on my trend ribbons. And then from there, it's a manual process. So from 2,500 on a very, very busy day, it could come down to a couple of hundred. On a quiet day, it might come down to less than 100. But I'll look at each one of those charts. But I can scan through the charts pretty quickly because I like to think I've got a trained eye. So for example, I don't know, there's a few sketchings on those lists, but I could get through the list about this quickly, and then I'm just shortlisting, and I might see something like that, and I'll go right click and shortlist into a watch list so I can check it out later, and I'll be flicking down. Not that one, not interested in that one. That one I might right click on. Obviously that I might I'll do a short scan for shorts as well. That might come up on a short list, but I can get through very quickly, and then the list that gets shortlisted from there ends up here in ChartWatch ASX scans. I think that's kind of the final message, that if we click on this, the shortlist today, or this morning for the last candle, so it's always the morning after for the candle before, that's the shortlist that you get, and that's the work I do for you every day of the week, and then I do another shortlist. So of this list, it gets shortlisted again to what I call my featured trades, which are my highest conviction uptrends in this case, and I also put 10. I pick 10 charts out of those, but sometimes there's more than 10, and there's the shortlist for downtrends, and then the featured charts there. So that's pretty much how it works. Hopefully that answers your question, TK. The next question is what I had queued up before, which was on CAT. Let's go here. Now you can see what I'm talking about. Catapult Sports, and just to give you that background again, a couple of people were asking about it. One was saying, what do you think of it now? The other one was saying, look, go check the analysis from a couple of weeks ago, because it was looking pretty good at the time. And that's true. And I just want to follow this through because I've had so many emails during the week from you all, and it's wonderful to get them saying, I'm actually able to look at my portfolio now, almost in many cases for the first time ever, with different eyes, and be able to tell when I need to plus R equals R or minus R, and that's really ultimately what it always comes down to. So I just want to follow this through very quickly as a case study. And we can see here, this shadow here I think is important, and then we're going to get to a point where we're going to talk about this shadow as well, and then start to talk about this candle. But the whole point of the way the candle is formed, and let's just say we've got a candle here that at one stage resembled that candle. So at one stage, those two candles were identical. Okay, at one stage, those two candles were identical. Let's say it was at lunchtime, middle of the day. But by the end of the session, we had some supply coming into the market to push the price down. You're going to see how that's going to make sense in a second. So we get a situation where the selling starts to come in. The selling starts to come in a little bit more. Demand is backing away. Supply is becoming increasingly more influential, and we end up with a candle now that are identical. Okay, so when we see these upward pointing shadows, and you see me talk about these all the time in my articles, don't you? This idea of supply side candles, upward pointing shadows. Basically, in each case, whether it's upward or downward pointing, they are pointing, I guess, to, in this case, where excess supply is lurking, and that's quite sinister when you think about it, in the system. Okay, that's where they are exhibiting their control in the market. Downward pointing shadows are just the opposite, pointing to where there's potentially excess demand in the system. And if you can, unlock that little nugget of information and really incorporate it, make it your own, you are going to look at candlestick charts completely differently. And here's another example of where the demand side is coming back in. And we can almost see this move through here, really just perpetrated or perpetuated, whichever one of those two P words are the best, by those shadows telling us where that latent demand or supply is lurking. And what's interesting about this, I think there's a fascinating case study here. I'm so glad we've got the ability to do this one today, is that point of demand there. And some people will call them, support or resistance. You must have heard this term, support and resistance, used in technical analysis. It's in every technical analysis book, isn't it? I hate that term support, and I hate the other term resistance, because they're so meaningless. What is support? What is resistance? Get rid of those terms. They're not helping you. This is a point of demand, or a point of excess demand, if you prefer, because that's exactly what it was. We can debate support or resistance, but ultimately, that's a point of demand. And the demand that was in the market at that time, buying that dip, is important. Because if we consume that demand, what is demand? Demand is cash. Cash looking to get into shares. And we have to assume there's a finite amount of cash. And I think this candle here becomes really important. That should stand out for you now in this narrative of this candle here, really consuming that latent demand that was in the system. And then we can look down, we can look for other areas where there might be latent demand in the system. There's no guarantees they'll be there, but the candles will tell us if they are, won't they? The other, obviously, clear as day for me is we are starting to see supply have more of an impact in the market here at 780, and there again, demand still fighting. Demand starting to give way, supply starting to take control. And what does this candle tell you about this battle between demand and control, this demand and supply control in the market? And you hear me use that phrase all the time. Who's in control of the price? If I'm confident the demand side's in control of the price and they're really motivated, that's when I want to have maximum risk or be adding risk. And if I'm unsure, that's when I will be backing off my risk. If I'm sure the supply side's in control, that's when I might be even going short. And I think, again, I love this case study. a picture tells 1,000 words, and really your candles in just pure black and white are just telling you what's happening in the underlying demand-supply environment. So now that we can understand what's happening, how do we turn that into action? So we analyze, we accept, we manage our risk ultimately, don't we? So we've done our analysis, we've accepted the outcome, the trend is potentially changing here. Certainly the short-term trend is changing. What's the long-term trend doing? Long-term trend is fine. It hasn't changed at all. It's the long-term trend. It's the big, slow behemoth. Lots of stuff is going to need to happen before we start to change that long-term trend. But not a lot of the stuff needs to happen before we change a short-term trend. And this is where style now, I think, comes into play. If I'm more of a shorter-term trader and I'm teaching you my approach, so by the very nature, you're learning something that's quite short-term. If you're a longer-term investor, I would say you can still use my approach, but you just need to make one change. You only need to click one button, and that is to go from D to W. D to W, and that changes the approach. It makes it automatically 5 times longer term because there are 5 daily candles in one weekly candle. But if we delve into that shorter term price action, we can see we're starting to have some issues here. And we'll quickly check back. Now, I don't suggest you go from one to the other. In fact, I prefer you don't, because I don't like to do that, because you're going to get confused. I say if you're a shorter term trader / investor, the daily chart's probably more likely to suit you. And if you're longer term, go to a weekly or even a monthly chart, but don't mix them up, because that's confusion, that's inconsistency. Let's follow this one forward. And of course, we know what's going to happen to Catapult, and it's not just what happened to Catapult, it's what happened to the broader market as well. We know that the whole market's going to come off. In fact, we can look down here at our relative strength comparative and see that Catapult is yes, it's coming off. Yes, the market's coming off, but Catapult is starting to underperform the market from a period of outperformance as well. So it's not just a matter of the market coming off. Actually, there's a bit more going on here. Demand side trying to come back in. I just want to get. Well, that's a little bit surprising for me, but I know we're going to get to another sort of confirming candle in the not too distant future. I spoke before about action, and for me, that is a classic minus R day. Okay, so it's a day where I'd be looking to reduce my risk exposure to Catapult, and in order of magnitude, how much, really that's up to you, but at least we've got something to act upon. And for me, they stack. These minus R's stack. So notice this point of supply up here. Notice I didn't say resistance point, because resistance is futile. Resistance is also a silly way to talk about what is happening in the demand-supply environment, because ultimately a resistance point is really where there's excess supply in the market. So let's just get these labels and get these names right, so that every time we talk about the markets, it's always phrased within this demand-supply vernacular. Now, notice the point of supply here. The second one is lower than the first one. The only way that can happen, ladies and gentlemen, is if there's increasing influence of the supply side. We've got greater excess supply in the market. You can see those upper shadows matching. So for me, that's clear as day. And then we start to move into a lower point of demand here. So we've got falling peaks and falling troughs, if you like. So this stacks. So for me, that minus R could well be 2 minus R's there. Okay, the severity of that candle is disturbing for me also. Potentially we could add another one, and you could divvy up. So let's say you normally invest $1,000 in a particular opportunity. It might be your minus R. Set it for yourself. It might be 1/5, or it might be 1/3. I use thirds, but you can use anything you like. Do we move back into higher peaks and higher troughs? Certainly we make a trough here, so this is another point of demand. And I know I'm going to great explanations here, but this will frame the rest of today's analysis, and I'll move really quickly through your requests from here because we should be able to see a lot of this stuff. And I know I've got new people always coming on board, and that's wonderful too. If you want access to my trend ribbons, and I'll hang around to the end, and I'll tell you how to get access to them as well. Now, we've got a lower point of demand here. Is there these are we've got like a little, I think that might even be a little peak trough in there. And I think it might be because we've got a lower high and a lower low. I'm just going to skip that one just so I don't have to type any more on the screen, because I want to get to the point here, which is by that point there, okay, I think it's pretty safe to say that something's not going right for Caterpillar. And with the candle, and again, we've closed back beneath the short-term trend ribbon. That's something I actually didn't mention before, but these are all explicit things. You can't stuff this up, ladies and gentlemen. Can you see shadows? Can you see lower points of supply? Can you see demand being consumed by closing beneath the point of demand? Are we closing beneath the short-term trend ribbon? Is the candle white? Is the candle black? These are things that are undebatable, okay? And I would say by that candle there, with what it's telling you, what we're doing now is we're starting to treat the short-term trend ribbon as a zone of dynamic supply. So on the way up, the short-term trend ribbon tends to, not always, tends to, more often than not, support the price. But we can see now, I used that word support the price, didn't I? Cushion the price. I'm not going to get away with that one. I use the word support. And on the way down, it tends to resist the price. It tends to impede the price going back up. And that upper shadow is telling us that there's a good chance that that's occurred. I was going to say before, by that candle there, for me as a shorter term trader, I can see no reason to continue to have any risk on Catapult. That's just the way I look at the market. And the way I explain that is to say ZRP, or zero risk position at that stage. And if for some reason you wanted to give it another day, really that day there can be no further argument that the supply side is in control. And whoop-de-doo, obviously it went down from there. It actually went down quite a lot. But hopefully we all agree that once you learn that stuff, you can draw those conclusions for yourself. It's not a matter of hindsight. And I love doing these case studies, because if we pretend we don't know what's going to happen next, really that's the same as doing any analysis that you're going to do on any day, where you have to analyse, you have to accept, and then you've got to manage your risk accordingly. So what do we do with it today? So fast forward, here we go. Well, now I've got a short-term downtrend. Who's in control of price? That's all we need to ask ourselves. Who's in control of price? That's our analysis. Accept that that's the case. Oh, but Carl, let me tell you about Catapult Sports. All the big sports teams are using them. They're growing revenues by 1,000 million% every 5 minutes. They are going to go to $100,000 million in the next 5 minutes. Okay, well, that's not accepting what the market thinks about Catapult Sports, isn't it? So we are saying, okay, there's what I think, and then there's what the market thinks and what the market's doing, and I need to accept that outcome. I'm happy to entertain this narrative that I have about Catapult Sports or whatever company that I've just fallen in love with and I'm just waiting to buy it. I'm happy to entertain that narrative when the market also thinks the way I'm thinking. That's when I'm going to do pretty well out of it, probably. But I'm probably going to do pretty poorly out of it if I think one thing and the market's thinking something completely different. So that accept, I think, is really important. And as good as you think Catapult Sports might be, we're accepting the outcome that the market is quite unsure. Let's say at the very best, the market is unsure. At the very worst, the market actually thinks there's something wrong here. Because if everything was going right for Catapult Sports in the market's eyes, it should have done that. It shouldn't have got beneath the long-term trend ribbon. When things get beneath the long-term trend ribbon, because we can see here the long-term trend ribbon tends to support price and tends to behave as just this most incredible place where the price tends to bounce off. I don't know why it does it. It just does it. It doesn't work all the time. Sometimes you get some vibration. But what we can say is that when you get beneath the long-term trend ribbon, it tends to be a really nasty thing, right? And this is part of trend change here. And again, it might take some time. But what we can see, demand side, equilibrium, supply side. We can see that very clearly. But we don't want to muck around with it too much, okay? Long story short, there's clearly not enough here to tell me that the demand side is back in control. The demand side, if the demand side is back in control, we'd be seeing rising peaks and rising troughs. We'd be seeing a strong interaction with the long-term trend ribbon. We'd be closing back above it. We'd be closing back above the short-term trend ribbon. They'd be starting to change, colours again. The short-term will go to amber. The long-term will go to green. We'll see lots of white candles. And all of those things may happen, ladies and gentlemen, but I just can't see them yet. So for me, all I have to do, once I've done my analysis, is accept and then manage my risk, which at this point is still ZRP. And there you go, ladies and gentlemen, that's my entire trading model. Now there's a few bits and bobs about how this thing contributes and how this thing contributes and how this thing contributes. I know I've had lots of questions about that via the email, and we'll touch upon some of these things. Don't worry, it's not like I'm trying to keep anything from you. It's just we wait for the right case study. But that's pretty much how it works. And what I love about this, I think pretty much anybody can do this too. Okay, let's get to, actually there was one more, and this is a bit more of a general one here. So how does one manage a retrace after the big run up? Perfect, I've answered that. Exactly what we just did. Just look at the candles, look at the price action, and I believe the answers are in there. So tick on that question when we're above the short-term trend ribbon. Okay, next part of it, let's just do a quick look at CXO. Which has had a decent run, and I guess this is framing Martin's question better. So Martin, we just do the work. We do the analysis. That candle there is a little bit scary, isn't it? Because when you think about where this candle closed, it closed quite high on the day, and then we slipped down to here. Maybe we rallied a little bit, that's the thing. And with that little bit of a rally there, then what happened? We know the shadow is telling me that there's latent supply lurking in the system. We know some of that supply started to come in the previous day, but more forceful here. Obviously, the market's probably getting belted on this day. Or I think Lithium had a big drop on the day as well. There are external factors. Not that they matter here. I'm just providing some colour as to why we might have seen the candle close here and then open down here. But the supply side had a great deal of control on that day. Okay, if we look at the volume, we can see now we've got something really above average here, but both in terms of volume and volatility, in terms of excitement of the market. So we can say there was a great deal of supply coming into the market because there was a massive amount of volume. I mean, 100 million shares traded is the highest for a very, very long time, really since this day here, which defined the end of the downtrend. And this is where we'll often see those other two indicators come into play, the OTR and the volume. And you see I'm hiding over the volume name there, and that stands for RSC. So something potentially important is happening. That's what this is telling us. Something big's happening today. Okay, we saw in the Nasdaq, something was big happening in the price action, but nothing. It wasn't so big in the volume. With the combination of it too, when you get the combination of something, we need to sit up and take note. So lots of supply hit lots of demand, but then who won the battle? Okay, yeah, there's still lots of demand in the system because volume is just buying and selling. You hear so many silly things in technical analysis about volume. You don't want to see your stock going up on low volume, or you want to see it going up on high volume, whatever it is, and you're just kind of missing the point there. It's buying and selling. So if something's going up on high volume, there's lots of sellers. There's lots of people wanting to get out. Why are they wanting to get out? Okay, we need to look at the price action as well. So lots of people wanting to get in, yep. Lots of people also wanting to get out. Who won the battle on the day? So we can say that the demand side, and why was the demand side buying? Well, the demand side had been taught to buy the dip all the way up. Okay, the demand side was in this positive frame of mind. Lithium story's changing, core lithium's oversold, it's still cheap, it's got to go back to whatever price they think it's going back to. So yes, there was still lots of demand in the system, but geez, didn't they cop it? Now, if we ended up with a big white candle, it would say, yes, there was lots of supply in the system, but geez, didn't that demand side come through with flying colours? It's not what we've got. Yes, there was lots of demand in the system. How do I know lots of volume? Massive volume. But geez, didn't they cop it? Look at the candle. Okay, so that candle's worrying me a bit. Now, here's how the model works. The model works if you see something you don't like, if you've got reason to do it, and do you have reason to do it? Hopefully you agree with me. It's not just the candle. The candle's only part of the equation here. It's what we're seeing in volatility and volume. And what I love about volatility and volume, and I know volatility is ultimately linked to price, but let's call volatility semi-independent, right? Even if that makes any sense, semi-independent. Volume's completely independent of price. It's an independent indicator. And I know RSC depends on the price of the security, but it also is looking at the price of something else. So here's the thing, ladies and gentlemen, about technical analysis. If you have the RSI, if you have the stochastics, and even the Bollinger Bands and the MACD, if you've got those indicators on your chart and half a dozen others, they are all based solely on the price of the security itself. They're just doing different mathematical interpretations of it, but they're all based upon the price. Now, do you know what analysis I do on the price? I just showed you candlesticks price action. Nothing is more commensurate, nothing is more instantaneous with the price than the price. Why would you do silly things like RSIs and stochastics and MACDs and delay them by 26 periods on a MACD or 14 periods on an RSI? So silly. And think you're getting any more information than by just looking at the price. Now, the people who created those indicators, they thought they were very good at the time, but they just didn't know how to read candlesticks. And that is almost certainly a fact, because candlesticks only really started to come into Western technical analysis back in the 90s, when Steve Nissen started to produce some of his candlestick books. So, but these other indicators were produced decades earlier. But here we are, we've still got them. They're on your charting package, so you think, well, they're on there, I better use them. And no doubt you've seen on TikTok, geez, that's a great place to get financial information, isn't it? TikTok, YouTube as well. Hey, I'm on YouTube. But these young kids, they're a lot younger than me. I don't know if you can see all these grey hairs. They've got 12 screens and 54 indicators on every one of those screens, isn't it? And they all believe that every one of those indicators does something for them. At the end of the day, ladies and gentlemen, just demand, supply, price, I believe is all you need. Putting more price indicators on gives you no more information. But if we can get to, say, volatility, that's something different. That's not doing a mathematical equation on the price. That's just how much it moved on the day. If we get to volume, now that is completely independent. If we get to RSC, we're bringing in another data set completely independent of the security we're looking at. Now we're adding information, ladies and gentlemen. We're not just looking at the same information 10 times and ultimately therefore drawing one conclusion. We're looking at largely independent or completely independent pieces of information to build a picture of what is happening in the demand supply environment. But I think I better talk about CXO because you're probably all just nodding off. It's just, Carl's going on about technical analysis again, bloody hell. My point is, if you can understand some of these fundamentals that I'm trying to convey to you, you start to get that this candle is significant. And my model says if you see something significant that is at odds with your prevailing risk setting or understanding of risk, which is adding risk at this point in time, up to that point, then you are allowed to do this, which is to minus R. But how much? How confident are you in that? I mean, I've told you the way I do it, but it's a minus R, 100 shares, 200 shares, whatever it is. But taking some off the table based upon a signal that is real and credible and significant, so that the next day you go, oh, well, that was a good idea. Probably should have sold a little bit more. We're always going to say those silly things to ourselves. But if we analysed, we accepted and we acted, that's the other A, act is the managed risk part, then we can't beat ourselves up, okay? And if it got taken over the next day at 50 cents, we've still got a bunch of skin in the game, right? We're exiting an amount of risk commensurate with the signal we're getting, okay? And I don't think that signal is an all-out signal because everything else is still really strong. That's part of our analysis too. Now we get to this day here, and clearly we've got another issue. And by no stretch of the imagination are these all-out days because we haven't taken out all the other stuff I've taught you. Now, I think there's a little, 100%. There's a point of demand there. Hopefully we can see that point of demand, POD. And I'm sure you're going to get very good at drawing on your charts, aren't you? I love to draw on my charts. I don't know if you've noticed. And eventually today we're actually forming another POD, aren't we? Now, this one's a little bit lower than that one, and that is ringing some alarm bells, but we didn't close beneath this. And this is the critical factor here, is whether we close beneath that point of demand. The demand has come back in at that point. Not everybody's going to get the message from their broker at the same time, oh, the point of demand's broken, or they're not going to tune in at the same time and see it themselves. Some of them will buy a little bit later, as we can see there. So I think we've still got some risk on this. I'm happy at this stage to equals R on the risk that I happen to have. If I happen to have it, it still equals R on what I've got. And that's what that equals R means. The question mark, we've got question mark, plus R. I'd love to do a survey among you all and say, well, who's at plus R right now on Core Lithium? Carl, let me tell you about Core Lithium. Now that lithium mine they've got, and let me tell you about lithium demand. Oh my God, it's rocketing, Carl. Okay, well, that's not part of accept, is it? That's not part of accept what the market's saying about it. So let's get rid of all of those narratives. they're completely useless to us, right? Because nobody cares what we think anyway. We've analysed, we've accepted that it's pretty balanced here. We've got some out. If it tanks tomorrow, happy days. We can always add, we can always buy. Like, there's no rule, right? There's no ASX. If you go to the ASX website, there's no flashing red rule at the top that says, sorry, mate, you sold core lithium last week. You can never trade it again. If it goes back up and presents evidence to us that the demand side has regained control, we just plus R. Like, that's it. And we don't care about what's happening here. Please, ladies and gentlemen, I wish I could cover, I can't join this platform, but I wish I could cover the price. Because the price is irrelevant. Oh, I can't buy core lithium now. I mean, I sold it at 22.5 and now it's 24. I mean, why would I? Forget the price. Plus R, equals R, minus R. Analyze, accept, act. Let's keep moving. Hopefully that answers your question there, Martin, on how I do stuff. Let's go C79 and then I'm going to whiz through. Well, I promise you I'm going to whiz through. I say that every week, don't I? I'm going to whiz through your online request. Chrysos Corporation. Oh, you know what? I don't have to spend much time on this now, ladies and gentlemen, do I? You do the analysis. Like, what do we think about this? And really all we need to ask ourselves are we FRP? And you might have seen me use that. I know. Look, let me tell you, the market index admin team, the number of times, dear market index, Carl uses too many acronyms and I have no idea what they bloody well mean. I apologise in advance for the next 50 emails we're going to get this week. FRP, full risk position. Guarantee the R, ladies and gentlemen, if you see an R, it stands for risk. Okay? P is probably position, full risk position, zero risk position, are we adding risk? Okay. Full risk position, question mark. And straight away your brain should go, boom, nope, can't be FRP on this one. Now, probably still reason to have some risk in the game, like we've still got a long-term trend. And I do know people, and I've taught this system to many, many people over many years, and people say, Carl, I sell my last little bit when we get beneath the long-term trend ribbon. I just like to have a bit of skin in the game. No worries, I don't care. Once I've taught it to you, you can do whatever you like with it. So here we go. I'm just going to do minus R's here. We're not going to do any explanation of price action because we've done it to death. But clearly, ladies and gentlemen, please, I've got 2 R's there. I think a few people are probably thinking 3 R's for that one. And then even this candle here. Like, what does this candle tell you? Big wipeout on that day. Maybe it was one of the zebra days where the market went down. And then look at this day where the market probably rallied, right? And yet, what is Chrysos doing? Starting to lose relative strength down here. I know this day's skewing the volume. I don't know. I wouldn't have a clue what's happened today. But something big looks like something big's happening today. But this upward pointing shadow here tells you, okay, that supply looks like the supply has control of the short-term price here, and today's confirming it. Now, today's candle's not closed, and we have to remember, anytime we do analysis on Wednesdays, we're doing it, unfortunately, with a live candle. So it could change, but let's take it on face value and respect the fact that we may need to recheck our analysis by the end of the day. Today's candle looks like supply side confirmation as well. If this candle was a triple minus R, that big black one there, then I think today's candle's a minus R as well. And I would question whether we still have any risk left on this one now, actually. I know I said at the start maybe we've still got some on it, but now I'm questioning whether we still have. But Carl, let me tell you about Chrysos. Okay, let's go to your online request. Thank you for being so patient, Glenn. Hopefully, ladies and gentlemen, it's been worth your while in the meantime. And even if you don't get your question answered today. National Australia Bank, because why do I spend so much time at the start? Because we look at a chart now and know exactly what we're doing. Is this a FRP? This is not an FRP. Is this have some risk in the game? Possibly. Oh, but Carl, I can't sell my NAB shares because of my dividend yield. Hey, I'm a trader. I don't care about dividend yields. If you are an investor who cares about dividend yields, you have to make your own mind up. Because the point I want to make is that if you're on the weekly chart, you wouldn't have seen already the fact that it's ZRP on a daily chart, right? And we're not switching. But even on the weekly chart, we've got some issues here, right? We've got big upward pointing shadow there. We've got a confirming candle here. We're playing around with the short-term trend ribbon in not a great way. The short-term trend ribbon is neutralized. Is this a ZRP on the weekly chart? No, I don't think so. But it's starting to look challenged. okay? We can see here that the long-term trend ribbons still work. The model is exactly the same. We're still seeing candles, we're still seeing trends, we're still seeing the trend ribbons do what they're supposed to do. And that is the magic, ladies and gentlemen, of my trend ribbons. Why? I don't know why, they just do, okay? I drive a car every day. I can't tell you how an internal combustion engine works. I can't tell you, actually I do know how an internal combustion engine works. The only thing I don't know how it works on a car is a clutch. How does a clutch work? But I can still change gears. Why do my trend ribbons work so well? I don't know, but I can still use them. Now, I don't want to get in the habit of flicking between daily and weekly, but the elephant in the room is, but Carl, my dividend yield, I can't sell NAB now. I've got capital gains tax, Carl, because I've been holding them since 1942. They're your concerns, okay? I'm just look at charts. Let's get rid of these and start again, looking at the daily chart. As a trader, what do I think? Well, I've got a short-term downtrend. This candle here, ladies and gentlemen, I implore you, okay? That's the one that I think requires some action in terms of minus R. We've also got closing beneath what was at the time a pretty substantial point of demand. This is the new point of demand. It's being supported, not supported as in the old sense of the word, but it's being, combined with. I know there's a better word, I can't think of reinforced. It's been reinforced by the long-term uptrend ribbon, which we know tends to do its job pretty well here for now. We can therefore conclude that something down here, for me, if I'm not there already, is going to equate to that. And I think analysis can be really complicated or it can be really simple, okay? I don't think we're, for me, I'm a ZRP already, to be fair. If you're a bit longer term in nature, maybe you're not quite there yet, but obviously we've got some problems. Now, it's not irretrievable because we don't know what's going to happen next. And if we start to see the demand, what are the fingerprints of excess demand? Rising peaks and rising troughs, clearing out supply, rallying more than when we pull back, downward pointing shadows, white candles, holding on, respecting those ribbons, getting above them if we're below them. That's going to give me great information on to whether I can hold the risk I've got or potentially increase risk. Glenn, I'm just going to do one, obviously, just to get through everybody's requests. Try to. Let's go to XRF for Bruce. I know, Bruce, we've finally got your trend ribbons working. For everybody who's requested them already, I have actioned all of them up until half an hour before today's webinar. So if they're not working on your system yet, in fact, let me go one better and show you. So this is where you're going to find them, not on Market Index. People sending us their Market Index emails and things like that. I don't need your Market Index email, ladies and gentlemen, because I'm not adding them on Market Index. I'm adding them on TradingView. So if you don't have a TradingView account, you can go get one. You only need the free one. Please don't think you need to do any of the subscriptions. That's your choice, but you actually don't need it. And you need to get yourself into a super chart. This is a super chart here, okay? If you don't know how to find the super chart, if you can go here, maybe it's in, you would think it would be in there, but it's not. But if you go to your profile, that's my profile, in products, there's super charts. If you click on super charts will pop up, right? Then you go to indicators, okay? Another window will pop up. You can see I've got a few of my other ones, like the OTR and a few other ones that draw all the peaks and troughs on the screen for you. That's pretty neat. And maybe there's an opportunity to share those down the track. But we've got these invite-only ones. You click on invite-only, you'll see my ones, and then I think you just click the little star there. And next time you click on indicators, in favourites, they'll appear in favourites, right? That's how you get them to favourites. So if you're wondering where they are, now you know where they are. If you don't have them, I'll tell you how to get them at the end of the presentation. Hopefully that was useful for you. Let's head back here. We're going to keep going with our analysis. How are we going for time? Not terrible. I'll probably do another half a dozen after this one. XRF Scientific, again, moving quite quickly. I don't need to explain everything here. We're certainly not FRP. That's impossible for my model. Doesn't mean I think this is a bad stock, because I don't care. Honestly, I couldn't care less what XRF does. No care in the world. But Carl, let me tell you, sorry, don't care. I would say we've got pretty decent supply side control here, and we're flirting with that long-term uptrend ribbon. transitioned. It's starting to contract. Short-term trend is impeding price action. It's acting as a zone of dynamic excess supply. The candles are almost exclusively black, and they were that way on the way up, which is a bit weird as well. When you have candles that are black on the way up, for me, that's a real red flag, because even when the price is going up on the day, probably because the rest of the market's going up, you still have fund managers out there that are selling into that strength. And that's what black candles ultimately mean, selling into strength. So not one that I'm all that excited about. Let's just say that, okay? And I'm sorry to be the bearer of bad news if that happens to be your favourite stock. But again, they're not our children or our partners. We don't need to care about them. They're just stocks, right? Out they go. Off with their heads, I say. AD8, which is one of my favourite companies, starting to bounce. So I don't know, Graham noticing it's up 15% in the last few days. So if we go here, you'll see my models view on AD8, and you can see my models view on Treasury Wine Estate 41 times featured downtrend. I'll explain to you what they were. But I noticed that AD8 also 57 times 57 times featured downtrend, starting from $16, $16. And you can see almost every time I've featured it, the next time the price has been lower. Holy moly, ladies and gentlemen, if that does not explain how my model works, then I don't know what does. But things can turn around, and we know that, for example, Domino's is a great example of one that went, 61 feature times. But if we now look more recently, it's had one appearance as an uptrend, and that was, again, that's 36 down to 13. If that doesn't explain how the model works, I don't know what does. But the point with Domino's is things can turn around. I just don't think it's turned around yet. So I have some rules. I can buy things quite aggressively, actually. I do have an aggressive setup, but we're not there yet. I'd like to see preferably at least a short-term uptrend. That needs to at least be amber, but preferably green, and we're not there yet. I need to see at least rising peaks and rising troughs, and we don't have that. We've still got lower peaks and lower troughs. So it's something that at least, and we'll probably see an interaction not too distant future, I think, with that short-term trend ribbon kicking in. A very shallow pullback here, and then a rally. Typically, for these types of aggressive setups, I've seen something substantial happen in the volatility and the volume on the major low, because major lows tend to occur on substantial volume of volatility. Now, to be fair, was that one? It wasn't far off it. Little bit there. You can see the rallies tend to occur on something interesting going on. But this is also a bit ho-hum here. It's still a bit ho-hum. So it's still a pass for me. I'm not saying that it can't go up, because these are good candles. These are great candles. In fact, these are candles that are enough for me to get to the point that if I had it, I'd be equals R. So officially, all of those minus Rs you saw before, I'm not minus R. I don't think there's any need to continue to short Audinate Group at this point. I'm happy just to sit on the risk I've got, but I certainly would be adding risk at this point because I don't have enough evidence that the demand side is in control. We've had times before, and really they ended up being trades and not investments, where the demand side had fleeting control only to be beaten back again. I think it's too early. What's the old adage here about trying to catch the falling sword on Audinate? It's you've lost your hands, haven't you? A few times on this one. Let's go to if you hang around after the session, I normally hang around for a few minutes and talk about questions like your one there, Thea. I think maybe let's just get through a few charts here. Let's go to Chris, who's got MP1, and then we'll skip to the bottom. We'll head up and we'll do the last few. Look, interesting. I think we can all see ZRP, and we can all see there are candles here that even blind Freddy could have realised we needed to do a bit of minus R-ing up there. So I'd be ZRP, good rally, don't get me wrong. I mean, and then straight through the uptrend ribbon, which is not typical. It's not typical to do that. I think the rest of the market has started to, this rally we're seeing, the rest of the market is probably helping here as well, maybe the Nasdaq rally. I see that it has held this level here largely, and that's encouraging as well. But we are really, I really think we're just kind of just making up time here and making up numbers, aren't we? Because we know that whilst there are some good things here, there are too many things that are consistent with supply side, at least creeping in at the very best equilibrium. And you can see we've gone demand side, equilibrium, and we're really now sweating on the next phase. Is it supply side, or can it get itself back up? And I can't answer those questions, ladies and gentlemen, because I can't tell the future. And because I can't tell the future, really the only thing I can do is follow my system, and my system isn't telling me that plus R here. If I squinted, now I don't have any risk on this one, and I wouldn't, my system wouldn't, but given the rally, I could get to an equals R. I could scrape it into the equals R, but as soon as it starts to peel away again, and you'll know the candles, I've taught you that now, it would be more inclined to move to a minus R than plus R, that's for sure. So I think we've got some problems there. Okay, we'll skip down the bottom list because I know there's some people who've been very patient. We're going to do, Jason's got SS1. Some decent things happening. We can see, I know I keep looking back, but I think I've made my point with some of the minus R's through there. Is this a plus R through here? No, I don't think so. It's still beneath the trend ribbon. It hasn't yet made rising peaks and rising troughs, and really it only started to do that again on this candle here, and that's not a candle I'd want to be adding risk on. So it really hasn't done enough yet. It's starting to do the right things though. Again, we have to squint a little, don't we? There's a point of demand there. That point of demand is a little bit higher. That one was lower. Okay, there's a point of supply there. The next point of supply will be high. So technically we're back into rising peaks and rising troughs. This candle here is solid. No volume interaction. So we're not seeing the kind of interest here that is consistent with really convincing demand side control, are we? Again, I wouldn't have it, but if I did have it, I could get to an equals R at this stage and then waiting to see what happens next. And this goes for any time I write equals R. Some stuff like this, we know what we need to do. That's going to move us back into a minus R frame of mind. Okay? If we see some stuff like this, now we've got a point of supply that we need to deal with. More white candles. This is a point of supply I'm talking about here. If we can see a confident move into that point of supply, a nice white candle close, we know that supply is there, right? Supply equals latent selling, latent shares wanting to get cash. We need to trade with them, okay? And we'll know we're trading with them when we get a nice white candle high close and above average volume. That means we've taken out that supply. So there's a few things I need to see. But let's give it the benefit of the doubt and say that they might happen given some good things are developing, and we could get to plus R. SOL, ZRP or short, I think we said last week. I don't think there's any reason to change that. And you might say, Carl, it's rallying. Yeah, I know, but it took the rest of the market to rally to make this thing go up. It hasn't even gone up that much. It's still not outperforming the index yet, is it? So its rally is really in line with the market. It's nothing special. Stuff that rallies more than the market, they're the ones the fund managers are rotating into. This one, I think it's just limping back up. And we do know that the long-term trend ribbon tends to impede the price action. So I'm a bit concerned about it there. So look, I'm just going to go ditto on last week. I'm still ZRP. I can't short it based upon that candle, but if it started to peel away again, then this would certainly be a minus R for shorting for me on this one. So there you go. And for now, it's like on a few of the other ones, I said, oh, look, there's enough evidence in the system to just squeak in at equals R. Look, I don't have it, but if I did have it, I could get to equals R. I can't write that one on this one. Okay, I wouldn't be equals R on this one. I'm still ZRP. Okay, it's not my opinion, ladies and gentlemen. It's my analysis. Let's do three more, and then we need to adjourn for the day because we're just about at time. BHP's, well, actually, I was going to say BHP's a good one to do because lots of people have it. I don't need to do it. I did it yesterday in ChartWatch markets. So just head over to here and in technical analysis. ChartWatch markets, I covered it yesterday. Okay, so I'll direct you to there. If you're not reading ChartWatch markets yet because it's a new article series, you should, because there's a lot of my analysis on plenty of other things in that as well. Let's do three more. Let's go SXE. Look, one of the few that we've actually seen that is still hanging in pretty well. It has been flirting with that short-term trend line, but seemingly holding on to it. Hopefully, ladies and gentlemen, that is standing out for you. And really that's probably the major signal there. I know that one doesn't look great, but it's pretty benign. And then possibly closing beneath a short-term trend ribbon. So I think there's a couple of R's there, but we'd be glad that we still had skin in the game on the basis of holding this point of demand pretty well for now, I think. Some good candles here and here. Today's candle's not inspiring, but it's not finished yet. This is one where I think you'll agree with me that we can get to equals R very quickly on maintaining the risk we have, albeit it's reduced from previous levels. And I won't do where I'm going to plus R and minus R, because I think those things are self-evident now. But I can get to equals R on that one. Two more. HLS, which I ran as, I think I ran it as a feature, didn't I, just the other day. And I can check now. I can check very easily using this. And we do want to make this available to everybody else, but there's a long development pipeline. There you go. So I have run it recently as a turnaround setup. You can see most recently on the 20th, and I want to get to that candle. So I don't hide my analysis, everybody. It's I produce it for you every day. I do this work. Like if you couldn't be bothered doing bloody candles, bloody ribbons, I do the work for you every day. I put it in ChartWatch. So that's the day. It was that candle there that it becomes my turnaround setup, because you can see the long-term trend is changing. And this is really relevant because we've seen so many where that hasn't been the case. For example, Audinate. So when we start to treat our ribbons as zones of demand, more often than not, we're in the clear, aren't we? So I think this one looks pretty decent. And is this the first? I think this is the first time that unequivocally I'm plus R. Look, equals R if you've got it. If you're not looking to add risk because your risk bucket is full. We talked about that right at the start. That's why I was doing it at the start of the presentation. Your risk bucket is full. It's equals R. But if you're looking to add risk, that's the way I think about it. You can do whatever it is you want. I say always, as I say, knock your pretty frilly little socks off. I think I've got one more to go. James has got VEA to close us out. And equals R, yeah, surprising me actually, because it was looking pretty nasty a few weeks ago. But it's actually held up pretty well. So can I buy it? I think we all know I can't buy it. You can do whatever you want. But we can get to equals R on this because it's starting to show signs that the demand side is coming in with sufficient force actually to start to change some trends. I'll never get in at the bottom. I can't buy it here on that day. Not interested. But I can get in soon enough, and I can get in like Healius, isn't it? When I'm confident that the demand side is in control. So great to have Healius before this one, because we saw some of the things that we need to see before this is going to get itself into plus R. And at least, a nice test and hold a long-term trend ribbon. But we've got a little bit of supply. Just note, we've got a little bit of supply over here as well that it may need to contend with, and that's not far away. If you can get ones that are much further away from their next supply zone, because we do know that we've seen it. Things get to supply and they stop for a while. So we want to find the path of least resistance. That's the best way to go. Now, I did promise before to tell you how to get my trend ribbons if you want them. If you're listening to me for the first time, if it's the first time you've seen me talk, and you want to get those trend ribbons, in the description of the YouTube video, that's below, just scroll down a bit, there's a link to a form that you can fill out. Make sure you put your name in. If I see requests that don't have a name in them, I don't grant them access, because I think it's common courtesy to give me your name, and then put in your TradingView username. We talked about how to do that earlier on in the presentation. If you're only seeing this bit, go back, watch the rest of the presentation. In fact, let me quickly just show you how to do it, because I get so many usernames that aren't even valid, or people send me their email address. So we go back here, and that is the username. So if you just copy and paste that, obviously mine is what it is, but yours will be whatever it is, and that's the thing that you need to send us in the form. Don't send it to me anywhere else. Don't email me. Don't put it Don't put it in the YouTube thing and ask for it there, because you're not going to get it. The only way you can do it is via the form. Hey, if you are listening on YouTube and you liked what you saw today, if this is starting to have a positive impact on the way you view the markets, hit the thumbs up button. Let me know you like what I'm doing, so I'll keep doing it. And of course, if you want to get notified every time one of my videos goes live to the Market Index YouTube page, hit the subscribe button as well. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. Hopefully you enjoyed the session. I certainly did. All the best for your trading and investing. Until we catch up again, bye-bye for now.